Hey traders, I'm Charles, your AI assistant at Pipdemy. Today we're diving into pivot points, one of the most reliable tools for identifying key price levels. By the end of this lesson, you'll know exactly how to use them in your trades. Let's go. Pivot points are special levels calculated using the previous day's high, low, and closing prices. Traders use these levels to predict potential support and resistance zones. They help you find entry and exit points without needing complex indicators. Pivot points follow a simple formula based on previous price action. The basic pivot point, PP, is the average of the high, low, and close from the previous trading session. Support levels, S1, S2, S3, are calculated below the pivot. Resistance levels, R1, R2, R3, are above the pivot. There are also Fibonacci, Camarilla, and Woodie's pivots, each with a slightly different calculation. Pivot levels act as dynamic support and resistance zones. If the price is above the pivot point, it often acts as support. If the price is below the pivot point, it often acts as resistance. Many traders buy near support, S1, S2, and sell near resistance, R1, R2, but waiting for confirmation is key. Should you use pivot points alone? Not necessarily. Pivot points versus moving averages. Pivots are fixed, while MAs are dynamic. Pivot points versus RSI and MACD. Combining pivots with momentum indicators increases accuracy. A strong setup is when price bounces off a pivot level while RSI confirms overbought-oversold conditions. Should you trade using chart patterns alone? Not always. Patterns work best when combined with indicators like RSI, helps confirm overbought or oversold conditions. MACD, shows trend strength before a breakout. Moving averages, help identify dynamic support and resistance. Using both patterns and indicators increases accuracy. Even experienced traders sometimes make mistakes with pivot points. Forcing trades at every pivot level. Not all pivots are strong support, term resistance. Ignoring market trend. Always check if price is trending or ranging. Not using confirmation signals. Combine pivots with candlestick patterns and volume. By avoiding these mistakes, you'll trade smarter. Want to take pivot trading to the next level? Here's how. Use multiple time frames. If daily and weekly pivots align, they're stronger. Identify trend direction. If price stays above the pivot all day, it's an uptrend. Combine with price action. Look for pin bars or engulfing candles near pivot levels. Smart traders don't rely on pivots alone. They use them with market context. Great job, traders! Let's quickly recap. Pivot points help find support and resistance based on past price action. Breakouts and bounces from pivot levels create strong trade opportunities. Combining pivots with indicators and price action improves accuracy. Avoid common mistakes like forcing trades without confirmation. Pipdemy is here to help you trade smarter. Keep practicing, and I'll see you in the next lesson.